The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. My computers are all broken. I know that because it shows the stock market being down, and I don't know how that could be possible. But it is down. There's some statistics here that I think we really need to look at. Basil Chapman has been talking about these all week. The key number that he was looking at was around 16,840. Right very within a few points of where I was looking, around 16,800. We're way below that now. So that should start to be resistance if, in fact, this is the start of something big, which it appears to. Folks, it did not handle good news yesterday. That was the real key. In my opinion, the market really tried to rally, and with that GDP number, no one believed it. And then, of course, when the market turned, people started to see something was wrong, and then some of the technicals are being violated, which I think are relatively, very, very important in the technical work that we do with the markets and stuff. And I think that's what we really need to focus on the first part of the show here, because we'll have Rich Anderson from Anderson Capital Management is going to be on at the break. And I did want to cover a few stock market things here because we're really doing some serious damage here, folks. I don't know if you're aware of this, but we are going below the lows that were made in early July. That means that most everyone that has been buying stock in the month of July is now underwater. I mean, our low we had in the New York Stock Exchange Index was 2,880. On the 9th of July, and now we're trading a good 100 points, under that. So it's telling us that we have a great deal of weakness in the overall stock market. And yesterday, if you'll take a look at that chart, you'll see that the market barely rallied. It could only make a 382 retracement when the GDP number came out, and that was what I thought. Once it weakened up after that was the kiss of death for it, and we'll see. This should be really something big, folks. This will be on the order of the bottom like we made in March of 2009. I think we're looking at a top here that won't be seen for a very, very long time. The problem is not really in the problem is in the stock market, but the real markets, of course, are the bond markets. And we're seeing something that we've discussed before on the show, and that is that the yields between the high-yield bonds and the 30-year treasuries has now reversed, and you can see that the junk bonds have started to sell off very dramatically. We've sold off too in the 30-year Treasury bonds, but they're still, way above their July lows, so they're holding up relatively well. So people are exiting high-yield bonds, which is a good sign. The gap down today is probably due to this Argentinian debt thing, and frankly, folks, I don't think that means a hill of beans. These are hedge funds. None of these guys have their own skin in the game, usually. So what they're doing is they're playing with other people's money, and if they default on it, so be it. They just go out and find something new. So I don't think that's going to make any effect of it at all. I heard a commentator early this morning when I was watching the market open, before the market opened, just to see what was happening. I check on CNBC or Bloomberg just to make sure the end of the world hasn't happened and I haven't missed anything. But the gentleman said that this Argentinian debt crisis was equivalent to Lehman Brothers going under. And folks, that's total baloney. Lehman Brothers was the largest bankruptcy this country had ever seen, and it was being the largest competitor to Goldman Sachs. It was a very, very important event. This Argentinian thing is no no big deal. I remember when they defaulted before. I think it was about 30 years ago. They did the same thing. Mexico did the same thing. And Secretary Rubin, who was the best friend of Alan Greenspan, the government paid the $4 billion to Goldman Sachs to make him good. So you can't be too big to fail, boy. I mean, you can be too big to fail, but certainly not in the banking business. That's no question about it. That's the real thing to look at. Now, the next one we need to look at for the overall stock market is the VIX index, because we are coming up to a very critical level that Basil talked about, which is the 1620 level. That's the 786 off of the high we made on April the 15th. So we need to watch that April the 15th low, because that'll be a trigger mechanism, for finding support and resistance in the markets. Being well, of course, we know this is Thursday, and you'll never guess, astrologically speaking, the day following Thursday is usually a Friday. So if this works the same way tomorrow, Friday will be a very interesting day, because if it closes down, it doesn't even have to be anywhere where it is now, but if it just closes down on the week, that will give a very strong weekly reversal pattern, because you're reversing all of the gains of July, and that is usually a very, very ominous signal when you look at it from a long-term perspective on the charts. We'll take a quick look here. Someone's asked me to take a look at the Bradley. We'll just see how we're looking at here. We are still going down. It looks like in the Dow we're down quite a bit. So this is a big move down so far, and we will see if it's going to continue or not. Oh dear, what did I do wrong here now? Hold on just a second. I almost made a big boo-boo. Knocked off the site. Okay, hold on. We'll put up the Bradley model, and so far it's working. So it's looks like it's got a chance here. Finally, coming down. We're below the July lows. I mean, that's just hard to believe that we've already done that, and it only took 9 days to do that, folks. This market is so overextended that we could easily make a move like we made back in February. And that February move in equal spotting would take us down to 15,800 in the Dow. That would be another, which would be the 61% retracement off the February low, and that's almost 1,000 points, 800 points from where we are right now. So I think we've got at least 800 points to go in this leg down. And if we're making 150 to 200 today, you can be there in a few days. And we are going to accelerate. These days of 200 are not going to be the benchmarks. The benchmarks are going to be the days where you're down 500. And remember, the biggest day down, it was 777. That was back in the era of when it was in 2008, when Lehman Brothers was declaring bankruptcy. We were down 777 in one day. Then the largest up day was, I believe, 888. That was about 2 weeks later, and then we went down even more into March 9th. So we're having volatility. There's game on here, boys and girls. There's no question about it, in my opinion. We're moving, and we're going to continue to. We're going to see really wild swings, and this is the ideal situation for pattern recognition swing trading, which is something that I really enjoy doing. Now, I want to bring out one other market statistic here, if you'll give me a second, and that is with the, if I can only find it. Yes, here we go. I wanted to show you, I've already posted the Nikkei to show you that we made a triple top up here in the Nikkei, and we've also made it was actually a head and shoulders pattern, and we have come down to an area where we should be getting ready to turn down, because this was exact 786 these last couple of days in the Nikkei. Didn't get a point above it. So that's telling us that that market's getting ready to turn down off also. The German market is already down 6%. The DAX, it was trading at 10,000 just a couple of weeks ago. Now it's trading at around 9,400. That's right at a 61% retracement of those February lows, but we're already breaking down. If we look at the NASDAQ, we have not taken out the July lows. We're not even close to them. That's way down around the 3,800 level. So we've already taken it out in the S&P. We've taken it out in the Dow Jones, and we've taken it out in the New York Stock Exchange Index. But the NASDAQ is still holding true to form. And we'll see if that's going to continue down the road, but we'll have to let history tell us if that's going to be the case. The NASDAQ is basically on steroids, those 100 stocks that they use, and so the indicator that is the best to use, I think, is the New York Stock Exchange Index, because it's a true weighted value of the best stocks in the United States and also in Europe. They're the best stocks worldwide, 2,000 of them, and that's what gives the big movement that you would like to see. We're starting to see increased selling now in other commodities. The grains have still been under a great deal of pressure. They're still going down. Where it looks like we're trying to form a bottom here in corn and wheat and beans, which we will cover later on, hopefully when Rich will be talking to us about this at the half hour. But also gold. Gold is breaking down, and it looks like that 1282 level that we were looking at is probably going to give way to the 618 support down around the 1275 level. That's what it looks like, and I would like to at this time put up a gold chart here that is pretty descriptive of where what we're looking at here in the gold. This comes from one of our friends in Berlin, and you'll see that the price objective that we're looking at is somewhere between 1275 and the 1270 level. We have some cycles coming in. They come in next week on the 4th of August. That's just a nominal cycle that's there of 25 days, and it does a pretty good job most of the time. But remember, these cycles shift back and forth. But the good part about this gold situation is that we are heading down towards the level in perfect ABCD format. The ABCD from the high we made back in July, the ABCD from the high we made back on the 18th of July, and the ABCD we made just on the 29th of July. So all of those measure along with the 61% retracement coming in at the 1275 level. That is no guarantee that that puppy's going to stop at 1275, because if we start accelerating due to margin problems and reducing of some of this debt that we have in the stock market, where people buy stock on margin debt, you'll see some really significant things happen. In 1974, after the market topped, we had the same situation, but not nearly as bad as we have it now, and the market gave back 50% of its gains over a 7-month period during 1974, bottoming in what was known as the October crash of 1974, when the Dow got down to the 500 level after trading at around 1060. Going to take a little break here with the Dow down triple.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we have our first caller from California. Brent, are you there?
I am, Larry. How are you doing today?
I'm doing okay, my friend. How are you?
Very well.
What can I do for you?
Personally, thank you for being one of the few sane voices in this crazy market you've been. I think in the right way, giving people a fair warning about, being long this market. Just be careful, and I appreciate you doing it. I hope people listen to you.
Well, the rotten vegetables have stopped showing up at my door every day, so that's a good sign, I guess. What can I do for you, my friend?
I was going to ask you if you could look at a daily chart on the IBB, and do you consider that an island reversal?
It's too small of a range. It's certainly an island reversal from what we've done over the last 3 or 4 days. But the trouble with it, it's an ETF, and it doesn't trade during the off hours that you get with some of the other things. But it is certainly an island reversal there because you gap down below the lows of the previous days. So it's definitely an island reversal, and it gives a profit objective of a Gartley down around the 225 level. So that's down at least another 10%. It looks like, based on this particular pattern.
Okay, I've look like to me. But I know you've got Rich coming on, but maybe after that, if you have any time at all to.
Oh, I have time now, so if you have another question, go right ahead. You're more important than Rich. I've only known him 42 years. You're a new friend.
I appreciate that, Larry. Just natural gas. Do you think this is it seems to have somewhat found a bottom here? I'm not sure if it's. We talked about it before.
I know. I still think, it's down near that area that we originally talked about. But the thing that I'm concerned about, the fact here is if we come into this margin call selling that we could run into with the hedge funds and some of these other, mutual fund people, if they start liquidating because of margin requirements, you could start seeing selling in everything. We're starting to see it in oil and gold. We've already seen massive selling in the grains, but that's mainly because of an over supply that's coming in. But all that adds up to lack of credit, and that's where I think the real problem lies, is in the credit market, Brent. The stock market is large, but it's a small fraction of what the bond market is on a worldwide basis, and there's where the real problem is. Spanish bonds trading under the yield of a 30-year U.S. Treasury. I mean, give me a break. I haven't seen many things that crazy in all my years of investing. That just doesn't make any sense to me, but, the marketplace makes the prices, so that's what we can do.
I know, it's been ridiculous. I was wanted to call the other day when there was that Puma Biotech went up 300% in one day, and all these things that are happening are just
I saw that. I don't know. Were you around in 1999 when the stocks would triple and stuff overnight and quadruple? I mean, that was happening all the time. Yeah.
Yeah, I've actually been around the market. My wife's first job out of college was with Shearson, Lehman, Hutton. And so I've been around the markets, not as long as you have been, but I've seen the .com craziness and the housing bubble, and now this credit bubble, whatever you want to call it.
I think it'll be history will call it the credit bubble is what they'll call it. That's my guess anyway.
I really appreciate
thanks for calling in, buddy. I really appreciate it.
You take care, Larry. I'll talk to you soon.
You bet.
All right,
you bet. That was Brent from California, and now we have another caller, our good friend from the great city of the Lion, Singapore. William, are you there?
Yes, I'm here. Thank you very much, Mr. Pesavento. How about you?
Well, I am good. I'm glad to hear from you. It's been a while since I've heard from you.
Oh, actually, I have gone for some kind of minor surgeries, just 2 weeks back, so I'm back.
I know. I know about the surgery part. What can I help you with, my friend?
Okay. Yeah, I would like to ask you a question about, Tesla and Twitter. And for Tesla, it seems to me that it is possible to go for both directions because of the potential ABCD formations.
Yes.
So I would like to seek your advice. How would you, look at this particular stocks?
Well, right now what I'm looking at in Tesla is a potential Gartley coming down to the around the $200 level, down about another 10%, very similar to what we were talking about in IBB. The reason for that is, William, we just rallied for 10 days into a 61% retracement up around the 230 level. It stopped right at the 61% retracement, and it took 10 days to do that, and we've given up most of that in just a day or so. Stay with me, William, and then we'll finish this up at the break, okay?
Sure. Okay. No
Thank you. Stay with us.
Sure.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back with William from Singapore, and we were talking about Tesla. William, it really looks to me like Tesla is heading towards the 220 level. So that's where I think it's going to go.
Okay. Thank you so much. And what about the case of Twitters? What is your view on Twitters?
I really don't follow that one at all.
Oh, okay.
I really don't.
I saw someone, actually looking at 43 to buy. That was about 23.6% retracement. And I thought usually we'll look for, 38.2% retracements. That will be around $41.
That has a large gap in it, doesn't it?
Yes, very large.
Yeah,
gap.
I wouldn't touch that. I wouldn't touch that because of the, these earnings things come out, and I don't trust those earnings. So there's too many other good opportunities. The Tesla opportunity looks much better than the Twitter.
Okay.
Thank you for calling in, my friend. Sure. Excuse me. Go ahead, William.
Oh, okay. So in other words, we can look for support around $200 for a potential long trade.
Yes, I think so. If it doesn't get there too quickly, if it takes about 2 or 3 weeks to get there, that would really be ideal, because you'd like to see the time and price in the ABCD leg come down to Tesla around the 200. That would be that would be a beautiful pattern. If it gets there too fast, it's going to go way below the 220 level.
Okay, I got it. Thank you very much.
You bet.
Thank you.
No problem.
Bye-bye.
You bet. I hope we have Rich on the line now. Rich, are you there? He must be coming in on his jet. Not yet. Well, we'll have him on. We're going to start out with the grain markets with him, because we've had some really big sell-offs in these grains, as you know, and we'll wait till he gets on, and I have a comment for him and stuff. But we'll start out taking a look at wheat. As you can see, we've dropped well over $2 a bushel, which is $10,000 over the past 4 or 5 months, and they're expecting huge crops. What's interesting now is that the wheat is beginning to start to look like it wants to make a 3 drive to a bottom pattern somewhere around the 517 to 510 level, but it's still not there yet, and there's no reason to actually to get in this. It's it's just been an absolutely devastating market for any farmer that wasn't hedged, and most farmers are pretty smart. When they see prices, about 2 standard deviations higher than they usually are, they're not silly enough to not hedge the crop. And actually, some of the farmers are actually they really have to hedge because of their banking arrangements, where they have loans for their crops. Because if the crop price gets really high, they can forward sell the crop and lock in those huge profits. Now, sometimes the market goes against them, but what they do is they buy in the futures market at that price that locks in it. So we'll see what's happening. Okay, we got our hey, Rich, you're back on. Thank you.
Yeah.
Thanks for coming. Hey, Rich, I have some news here. I have 4 or 5 people that wanted me to thank you for your soybean call to go short at the 1242 level. Now they're trading at around 1081, and they wanted to thank you. And I also they wanted to send you a case of champagne and one of these exotic fruit baskets. But since I know you're not into those things, I had them send it to me.
Yeah, that's good, because I don't drink and you do.
I know, yeah, I know, and you don't eat fruit either. That's for sure. That's for sure. Anyway, listen, tell us about the wheat market. What are we're chatting a little bit about wheat. Did this have a chance for bottom in here?
I heard you talking about the 3 drives to bottom, and it's one of my favorite patterns. Also, I think the wheat has been. There's a little bit of dryness in Australia and a little bit of wetness over in Europe, but basically the wheat crop's in great shape. Brazil just got done planting, and they're going to have a couple million metric tons for export next year. What's kept the wheat market up is the risk premium that something would go bad in the Black Sea with Russia and Ukraine. But nothing has gone bad, but the risk premium's still there. So were that deal to settle down and get resolved somehow, that risk premium could be taken away, and you could see the wheat lose another 20 or 30 cents.
Yeah, that would complete that 3 drive to a bottom pattern.
Right. The beans have kind of stabilized in here.
I was going to ask you about that. What do you think of a possibility here of the beans making a head and shoulders pattern over this past month? It looks like that's what it's trying to do.
I never look for patterns, but if they jump off the screen at me, I pay attention to them. The soybeans are a August crop, and by that I mean you can have soybeans out in the field and you think they're almost dead, but you get rains in August, and all of a sudden they'll start to pod, the bloom and pod, and you'll have all kinds of soybeans. So what's critical is the rain in August. Unlike corn, which by the middle of July they've maxed out their potential need for daily rain, and the crop's basically made. The only thing that can hurt corn at this point would be an early freeze. We see nothing like that on the horizon, and even if we did, it'd be more of a quality issue than anything else. I could see the potential for beans if this pattern, unfolds and confirms. For that market to maybe rally 40 or 50 cents, but I'm still a seller, because come harvest time, we're going to have just a ton of corn and a ton of soybeans to be moved.
And they don't have the storage facility on some of it, do they?
Say again?
They don't have the storage for some of this stuff, do they?
No, you can store, out in South Dakota, Minnesota, here, we'll store corn on the ground, but you have to move it by spring because you don't dry it down and it would start to rot come spring when it warms up. But yeah, they'll just literally they just dump it on the ground, not on cement, just on the dirt, and maybe put a tarp over it, maybe not. If they don't put a tarp over it, the first 2 inches will cake, and that'll insulate it.
And that's what gives you your 20-pound rats that you have back there, right?
I imagine they do have some problem like that, but they're small compared to the ones in New York City. I guarantee you. Well, there's no question about that.
Do you see anything on the
beans get down under $10 come October? I mean,
I don't think there's any question.
The nearby beans are staying strong is because the Argentine government is having a bit of an issue with their currency, and the farmers over there aren't that excited about selling their beans and turning it into a currency that might be worthless.
I know that does make some of the things that happen in the international currency markets. People are not aware that affects everyone, farmers and industrial companies and everybody. And this is a big thing that's happening with the currency, but it's nothing like what happened with Lehman Brothers. One thing I wanted to chat with you about, Rich, and we talked about it Sunday night, was this thing that's going on at the Chicago Mercantile Exchange about this class action suit. Have you heard any more about that?
I've talked to several people, and one of the guys reminded me, if you go back 100 years, the stock exchange was telegraph, right?
Yes.
And then all of a sudden, some of these people got this newfangled thing called a phone, and they thought they were cheating because the guys on the floor had learned how to decode the telegraph that was coming in and would front run the orders. And then all of a sudden these guys had phones and they couldn't tell what the orders were, and they didn't like that. And I think these people that are complaining are people that used to be able to see the paper come into the pit and would step in front of it. Now with the computers, they can't.
They can't do that. Yes.
One of the big guys that you and I both know, they used to have a saying: if you wanted to get a bunch of, let's say, cattle or hogs sold, you come into the pit backwards, which meant you'd start by buying 50 contracts to, get the market lit up a little bit, and then you'd have somebody else selling them on the other side of the pit. I mean, saw that happen many a times, and so I just think it's a wee bit of sour grapes. Because they don't have the edge anymore. Their edge was highway robbery, but that was the way the exchange was, and now with electronics, you don't have any edge. That's why 90% of these guys that are, from what I hear now, you might have more accurate numbers, but of the floor traders used to trade on the floor, the percent that leave the floor and are successful trading, on screens upstairs. Mm-hmm. I've heard it's less than 10%.
Well, that's what it is for most people.
Built-in edge, and they don't have it anymore.
That's right. That's for sure. Rich, we have a question about cattle. Have we finally topped? I know we've doubled in price over the last 2 years. Is this area in the 150 going to top it or not?
Well, it's been a breathtaking move, and a good deal of the rally is due to the shortage of cow beef, of lean beef, which is used for hamburgers by McDonald's and Wendy's and everybody else. And that's really been the driving force. And this week, all of a sudden, the cow beef's kind of stalling out. I think the selling in the cattle here today had kind of a direct correlation to the selling in the stock market. And all of a sudden, people are getting a little nervous that money's going to maybe flow out. I expect that we're high enough. I wouldn't be selling the August, though, because we go into deliveries next week, and that's a specialized game, and these boys can make water run uphill. In fact, there's a pretty good seasonal to buy August and sell Oct for about 10, 12 days. But, that's the way these things are anymore with the big players. I wouldn't recommend that for anybody. Although it's probably going to work, but it's already worked today for 60 points, and if August got a buck under Ox, I would do it, but not here with a cash market. several dollars above the board, I don't think there's any risk of deliveries, but most of your brokerage firms don't like it when you're trading in the delivery or the spot month.
Sure.
And so it's not something I can recommend. I think if you're going to sell, you look at the Octobers, but I mean, it's already had a $3 range today. So maybe you get a little, dollar, retracement and, get short on something like that. But it's really about the lean beef, in other words, the cows. And so with these prices, the drought in the Southwest, it liquidated down a lot of the cow numbers over the last 2 or 3 years. And now that the pastures are back because we've gotten some moisture, guys are starting to try and build their herds back up. And so they're retaining a few heifers, and they're not selling some of their cows that they normally would have cycled out because, I mean, these calves, there were some 475-pound Wagyu steers went for $405 the other day. That's almost $1,900.
Wow.
For a 475 pound. Now it's a specialized calf, but even regular, the markets. There were some South Dakota, some steers, 800-pound steers. I had heard they brought 238, but that could be an individual deal. They might be black baldies and they're kind of fancy, and they're lean, depending how, not having a bunch of fat on them, because if you're going to put them in the feedlot, you'd like them lean rather than fat, so that you can put the fat on, because that's where you're making the money from the low-priced corn.
Yeah, Rich, are you and your brother seeing any rustling like you used to have years ago when cattle prices were about half of where they are now? We used to have a lot of rustling in that area. Do you still see that? Where they lose a lot of the...
Not in our area in South Dakota. Maybe out west, but, remember when hog prices were under 20 cents we had reverse rustling. You had to lock your trailers and your trucks when you went to the sale barn, otherwise you go home with a load of pigs, of baby pigs.
I can remember that.
But, look at the difference between the cattle and hogs right now. It's... Cattle, the best thing for high prices is high prices, and they'll find other poultry or pork, but
and also chicken.
The poultry, because we have this breeding problem with some of the poultry. I'm not a poultry expert by any imagination, but they really haven't increased their production. The production actually sounds like it's down about 1 or 2% on the report I just read last night. You would have thought with these high prices in pork and in cattle that they would be producing like crazy, but the roosters weren't as fertile. Near as I can explain it in simplicity, the roosters weren't as fertile as they're supposed to be, and because of some strain that's in these.
Yeah, we have to be careful talking about that stuff on air, because we are registered by the FCC. We don't want to get into any trouble. I heard somebody use the word bifurcated in the market the other day, and that actually surprised me. So, hey, listen, buddy, I wanted to thank you for giving us your time today. I know you've been doing a lot of traveling around looking at crops and stuff, so maybe we'll have you on in a couple more weeks, okay?
Well, the big crop tour is the Pro Farmer Crop Tour, which will be the third week of August. That'll start on August 18th and kind of end up down in Rochester, Minnesota, at least the western part, on the 21st of August. And they actually, you could sign up to go on it, and it doesn't cost that much, and they teach you how to go out and pick so many ears of corn and pull them back and count the number of rows and the length of the corn. I mean, that's how they do it.
I remember when I came up to your place, I think it was in '86 when we were looking to buy that feeding operation for the Beach Boys, and we went through that area, and they were there for about a day, and they had never been to that area. Those guys, they never, do any concerts or anything. They couldn't believe it. They said they couldn't believe that you could drive 3 hours and not see anybody.
Yeah.
Listen, thanks for calling in, buddy. We'll talk to you later, okay?
Very well. Have a good day.
You bet.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to finish up the show here with taking a look at natural gas. And it is below the 786. It gapped down below it. We talked about that a week or so ago. Down in that area at 380 per cubic foot is a pretty good support area, but what I would do here is I would wait for the market to rally and then buy the first pullback. You know, watch for a Gartley pattern on either a daily or a 30-minute or 60-minute chart. That would be the easiest way to enter it. This is a very volatile market. It moves $1,000 a day without even batting an eye. That's equivalent to 20 S&P points, and this is the first time we've had a 20-point move in the S&P in quite some time. And it's just the beginning in that market too. So you have to be careful, and we have to be careful in any market, but particularly the natural gas market, because it moves very quickly. and has a large value, even though the contract size is only $40,000. It still is it moves it's very, very volatile. We've just made a 786 retracement in the VIX index that we were talking about when we first came on the air here. So if the market is going to do any reversing, this would be the spot where it would most probably do it, because the VIX is a very good indicator of turns in the market. And we owe that to our good friend Basil Chapman, who is the master of VIX. I think we'll nickname him Mr. VIX from now on, because he has spot on nailed these turns, just absolutely phenomenal. When it was 11:41 last week, he was warning people that this was the spot to be careful, and sure enough, that was the turning of the stock market, and down she came. We're well below the areas, the breakout levels that I was looking at, which was 16,800, and also Basil was looking, I think, around the same area, 16,840, I believe. So that would be the next resistance level on the way back, because usually in technical analysis, your old resistance or your old support becomes resistance on the way back up. Why that is, I'm not sure, but it's still a very interesting phenomenon to keep an eye on. So we've got some really wonderful things getting ready to happen, folks. This is the last day of July, another astrological day that I picked right on the money. The day after the 30th is the 31st, and that makes it the end of the month. So we're actually going to be down for the month of July in the stock market, which is going to be our first down month, I think, since Noah built the ark. And we've got a long way to go. We're starting to see increased volatility, which is just absolutely super. And we're going to see moves now that I think will put some of them in the record books. Break some records that we haven't seen for 10, 15, 20, maybe even 70 or 80 years. I don't know, but we're going to see some wild things happen because of this number of bulls that we have out there, and also the fact that we have such a high, margin debt that's out there. And, we just had a lot of statistics that we've gone over these last 3 or 4 weeks that just been adding and adding and adding. Whether this is the reasoning for the market to go down, I don't know, but I don't think it's that Argentinian debt thing. That doesn't mean a hill of beans to me. We've been through it before. I mean, these people have been through it. I mean, Mexico's had a default, so it's not as if it's a big event. They're only talking about, I think, $4 or $5 billion. That's nothing. I mean, in these markets, it's it's chump change. So we want to keep in mind that we are getting increased volatility. Protect yourselves a little bit here. If you get another bad close tomorrow, you don't know where the bottom's going to be. I don't. I certainly don't. No one else does either. So we'll see. So live every day in an attitude of gratitude, and may God bless. And do something nice for someone that has less than you today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.